Donavon Ash here from the Elevation Real Estate Group and Remax Treeland Realty today, joined once again by Tyler Schachter, our fearless leader. And we wanted to give you guys a market update for the month of October. We just got the statistics showing us what's happening in the market. We want to interpret those for you and tell you what we've been seeing on the ground here. So Tyler, take it away.
Yeah, once again, it's interesting times out there. And we mentioned in last month's update in September, we were at the lowest inventory for the season in 40 years. That trend has continued into October. There were fewer new listings in October than there were in the month of September. And unfortunately, we expect that trend to continue throughout the remainder of the year, as typically November and December are not high seasons for new listings. In fact, our inventory is almost always at its lowest point of the year at the end of December. So there doesn't appear to be any relief as far as an abundance of new supply coming out there. And there still appears to be a lot of people looking, which of course leads to growth in prices.
Yeah, so we have had strong demand still as people are looking for homes to purchase. For Langley, for the detached market from September to October, we saw a 6.9% increase in pricing for detached homes. For townhomes, that number was 10.4%. And for condos, we saw a 5.9% increase. So significant increases in pricing, and that's just being driven by the lack of supply and the increase in demand. And it doesn't look like there is an end in sight for that situation.
Yeah, there's no real relief for that at the moment, except for the trend that we're seeing, at least on the horizon here, of increasing interest rates. So we have noticed, and we're not economists here, so we won't delve too deep into this, but the bond yield has already started to increase, which that affects the fixed term mortgage rates. So they've started to inch up already, and it's expected that they will continue to do so. And the variable rate is determined by the Bank of Canada prime rate, and Governor Tiff Macklem came out and announced last week that they're expecting rates to rise much sooner than anticipated. Because at the start of the pandemic, he had given, it wasn't even a strong hint, it was an overt promise pretty much that rates will not increase. They will be low and for a long period of time until the beginning of 2023. And now for the first time since the pandemic, he's come out and said, it looks like we're gonna see rates start to increase in the middle of 2022, which is likely second quarter of 2022, which could be early spring. So that was not surprising to anybody who's been watching the inflation numbers, but a change of course for the Bank of Canada, which may provide some relief. And what that looks like is if interest rates increases, prices will likely come down. However, it doesn't necessarily mean affordability increases. If you're looking at a $1.4 million home today, which is the benchmark price in Langley, and you can get that at a 2% interest rate, if the price drops to 1.3 million, but the rate increases to 3%, your monthly payment has not gone down at all. And in some cases, it may go up if the rates increase faster than prices come down. So it is something to be aware of depending on the timing of your plans here.
Yeah, so if you are someone that is considering making a move, there are still some opportunities in this market. I was chatting with a client last night who just got a job opportunity in another market in BC, and now they're considering selling their home here and making the move there where affordability is a little bit easier. And it's going to be a great time for them. Their home has gone up 10% in the last month. They own a townhome, and so that's a great opportunity in this market if you can move to another market where there's less competition or prices aren't quite as high. The other opportunity is condos. Condos are looking like they may be a little bit undervalued at the moment. We monitor that by looking at the gap between condo prices and townhome prices. And right now there's about a 25% gap, depending on what specifically you're buying. And historically, we've seen more like a 15% gap between those two product types. And so there may be some room for condos yet to rise here. So that's an opportunity as well. If you are looking to buy or sell and you want to know how interest rates and the supply and demand affect your plans, feel free to reach out to us. We would prefer to do this on a case-by-case basis, as we can't give blanket advice because everyone's situation is a little bit different. So reach out to us. We'd be happy to sit down and have a conversation with you.